When it comes to electric cars, Tesla has been the leader for a long time. They were the only ones making electric cars in the United States at one point. The idea has been around for a while in Hollywood stories, but Tesla was the first company to really make it work in real life. This is why Cathie Wood, a Tesla investor who has been bullish for a long time, thinks Tesla can't be stopped, and she drops a big bomb that proves it. There are now new companies in the markets for electric vehicles and inline engines. More and more people are switching to electric cars, so car companies are going electric too. Some of them want to be better than Tesla. Why can't Tesla be stopped? What does this mean for Tesla's price predictions? Well, we'll soon find out. It was recently said by Cathie Wood that Tesla has more unique situations to train their models on than any other company. Other companies won't be able to catch up because Tesla now has more than 1 million robots collecting data and sending it back to the company. Her own model is one of these robots. There are 3. Every day, new claims come out that Tesla will have 25% of the market for electric cars in 5 years. There are, however, signs that people are starting to think that Tesla will have 25% of the car market in 5 years, and that electric cars will make up almost half of all cars sold. When asked if Tesla is different from other American companies in terms of growth, opportunity, and size, that will blow away all past numbers. Cathie Woods answered that Tesla would be the biggest chance for growth in the stock market that had ever been seen. A few weeks ago, Cathie Wood did an interview where she revealed some shocking facts about Tesla. ARK Invest knows how strong they are and thinks it will be more about Tesla's unbeatable lead when it comes to autonomous. Overall, Cathie Wood says that Tesla's sales have grown at a rate of about 48% per year. In 2020, when Tesla was getting a lot of bad press, the company made $31.536 billion in sales. Let's look at what their income would be like if it grew by 50% every year for 10 years. If we assume that sales grow at a rate of 60% per year for the next 10 years, from 2022 to 2031, that's about $3 trillion in sales in just 10 years. Not sure how someone could make such a ridiculous amount of money for Tesla in 2031. Don't worry, it's just basic math. In other words, if one makes a few changes to their Tesla robotaxi estimates, then the average number of miles driven by each robotaxi, you can quickly get to this kind of revenue number by using Tesla robotaxi's more conservative predictions. So, let's say they are a little more optimistic about Tesla stock. This is how you make well over $3 trillion in just 10 years. ARK Invest is going to make a big change to their price target for Tesla in 5 years soon. Their beliefs are getting more and more positive, and companies like Tesla are growing their market share. It's only a matter of time. Cathie Wood says that people should be told that prices will be going up a lot because of this. It looks like the goals for hurdles to entry have changed in a way that helps Tesla. The first is technology for batteries. Besides a few Chinese companies, Tesla is the only car company that uses batteries from laptops and cell phones to follow the cost curve of the consumer goods industry. Also, Cathie says that automakers and analysts laughed when Tesla chose to use battery technology. These claims about Tesla battery technology made by Cathie Wood can be traced back to 2013. This is when smart car expert Gordon Johnson said that Tesla stock is too expensive based on their Panasonic laptop batteries, which made him sell his investment. When Tesla stock first went public, it was worth about $30 per share. Since then, it has grown by about 300 times. Cathie thinks that people sold their Tesla stock back at $30 per share because of the attention given to plain batteries that blew up. The battery burned up, and the price of the battery pack system is much less than what other companies charge. So if these other companies want to compete with Tesla, they have to put a lot of money into electric cars at a time when sales of gas-powered cars are going down. Cathie Wood made a very good point that doesn't get enough attention. Traditional automakers will lose a lot of money on the electric cars they sell if they want to compete with Tesla. To even come close to the same price, they will have to spend tens of billions of dollars and lose a huge amount of money. Because of this, sales of their internal combustion engine cars will drop because they'll be making and selling fewer of them. Over time, cars with internal combustion engines would make less money, and companies that tried to compete with Tesla on price would lose huge amounts of money. Cathie Wood thinks that the other choice will have less range or power. However, that could go in a lot of different directions. Other companies that chose to use lithium-ion pouch technology instead of Tesla's cylindrical batteries are still 3 to 4 years behind when it comes to cost drops. Cathie Wood thinks that the fact that Tesla is the only car company to have made its own chip is the second barrier to entry, and the most important one for value and growth. Tesla is copying what Apple did, which goes back to when Apple was new and Nokia, Motorola, and Ericsson were big names. People who are doing well with cell phones. Starting out, Apple thought it would be more than just a phone. It thought it would also become a computer. Still, the other businesses did not have their chip on their shoulder. Even though Apple's market share has dropped to 12%, it still makes most of the money from the smartphone market around the world. Cathie says that the AI chip is very important for self-driving cars, and that Apple is the only company that makes it. A second thing that some people think makes it hard for new companies to get into the market is the huge amount of real-world drive data that Tesla has collected. They now have more unique situations than any other company to teach their systems how to handle. It will be impossible for these companies to catch up to Tesla, which already has more than 1 million robots that collect data and send it back to the company every day. Because of this, Tesla's data lead can't be broken. Tesla has already won, and no one else is close behind. Take the case of them making electric cars as an example. Then the so-called competition would have to learn how to make a whole new technology from scratch, which is something they are not good at. Today, new businesses have to go through hard times, even though they have never made anything before. ARK Invest thinks that Tesla will have 25% of the whole car market by 2025 because of this. Wood's company did studies in the past that said as more electric cars came out, Tesla's market share would go down. ARK's surprise, Tesla's share of global sales of electric cars is either staying the same or going up. This gives them even more faith in ARK's main product. GM, on the other hand, saw a drop in sales, with 44,697 units sold in the third quarter of 2021, compared to the same time last year. Even though Tesla's sales kept going up every quarter, they say it's because of problems in the supply line for semiconductors. Keep in mind that electric cars need 10 times as many chips as cars with internal combustion engines. GM is now selling the wrong product, even though Tesla's sales are going up every quarter, showing that people want them. Volkswagen and Toyota make more cars than any other company in the world. Each company makes about 10 million cars a year on average and has several names that fall under one big umbrella. So if Wood is right, Tesla will eventually control more of the market than the huge German and Japanese companies combined in the next few years. Tesla fans and investors are excited about Wood's prediction, but the company says its goal is to build 20 million cars a year by 2030. There is no doubt that Tesla is a major player in the car business. Many traditional automakers may have been affected by Tesla to look into electrification as a way to improve and change their business models and strategies. To save money on gas, which is at an all-time high because oil prices are going up, is one reason. In addition, ARK Invest thinks that by 2020, about half of all new cars sold will be electric. That's great news for Tesla. 2022 is a very important year for the company, possibly their most important ever. In 5 years, where do you think Tesla will be? Leave a comment below.